Back over to you.
All right, Julia, thank you. Julia Borson, just off the after-hour session highs right now, higher by about 3%. A couple of days ago, we were talking about Netflix as being tariff-resistant, recession-resistant, recession-proof, whatever you want to call it. It looks like, according to the results and the guidance, like it is.
No doubt, and they're operating better, too. I mean, operating margins 31.7%. Then they guide to 33% next quarter and guide for up 15% year-over-year revenue growth, which sort of justifies the valuation, which is something I think collectively we've been saying for a while. So the all-time high, I think, was 1,064, something like that, back in February. I think this quarter is good enough to get it through those levels.
And there's still secular trends around streaming. I mean, people forget. I know the death of linear TV we've talked about forever, but streaming's still only 44% of TV time, and Netflix is taking a marginal share of that over the competition. So I would say recession resilient. I would say there are 3 different or 4 different areas people are having easy time pointing to. The growing ad revenue is part of this. The story that the operational efficiency guy is referring to, better margins, economies of scale, and content. I mean, really, the content's been extraordinary. And then when you put that into, hey, this is a decent value prop, whether they raise prices on you by $2 a month or not, think about where the consumer is spending money and where they will hold on to at least that allocation of their wallet.
They spend $18 billion on content, which outspends everybody by a large margin. But do you know Amazon Prime has a bigger market share than Netflix, quietly, on their Prime Video? That's excluding their music on one side. But when I look at this, it looks toppy. So I look at a chart, and the guy pointed out 1065. You look at 1,000 was the last high, lower high. I think it can get to where guys talking about, but the fact that they don't provide the subs, I think they know their growth is slowing. I think at this point, they're the name to beat, but I probably wouldn't be buying into it right here.
You know, it's hard to find mega cap companies in this. They think they're going to be a mega cap company by 2030, right? They kind of guided to $1 trillion in market cap that, have this sort of growth from an EPS standpoint, north of 20%, mid-teens sales growth. And, the one thing I'd just say about the recession proof is, like, we're not in a recession yet. You know what I mean? Like, so let's see how this goes. Let's see what sort of tariffs are put on services in the EU and some other places where, important growth areas. So, the silver lining, though, is that ad sales growing off such a low base, and they keep talking about doubling them. That's really helping that operating margin. I think that's probably helps justify the sort of valuation it has right here, nearing, 40 times.
The context, though, of this market is that people are willing to pay up in terms of premium valuations for companies that can deliver in this environment and that do seem to be relatively recession-proof or relatively spending pullback-proof. This is one of them. So I get what you're saying about high valuation or maybe it looks toppy, et cetera, but we've seen this happen again and again. I mean, look at Walmart. There's so many other names that we say that one is executing.
And most of their business is already outside. Most of their revenues are 56% outside of the United States. So that's been a growth, a tailwind for them when they say they're going to grow internationally. But they're already bigger internationally than they are here.
I think be careful, because we thought Meta could do no wrong, right? This was a story that, and I'm watching an analyst community that's saying this is their top internet play, and you can call Netflix a lot of different things. It could be media, it could be internet play. So when things seem like there's nothing that can knock it from the sky, be careful. But I do think even at, I'm seeing, roughly 32 times $12 of EBITDA. You've got a story that's actually very defendable, and I think it's something that I think right now in a world where there are other places that have a lot of issues to them, this is actually relative value for a tech space that's not cheap yet.
I think the caveat that you brought up is the biggest sort of overhang and question mark over the stock, and that is we're talking about reciprocal tariffs on stuff that we sell, stuff that comes into this country. How about services? And what if there is a reciprocal
Are we counting services? Apparently, we're counting that now. Some people don't count services.
Now we do. Now we don't. But in terms of the tariffs, we weren't talking about that. But if there is some sort of tariff on these digital services, that could really knock.
Yeah, I mean, the EU has
Netflix.
threatened that, right? And we're seeing this get ratcheted up no matter what region we're talking about with the tariffs. I mean, a lot of folks, and maybe it's a negotiating tool. These guys have been excluded, the services, in 2018-19 when we were kind of going through that trade war. So there's no discount for that. That's the one thing I would say is, as you get back towards these all-time highs, maybe it doesn't kind of hold that. I'd be surprised if it establishes a new range.
Yeah, but as Tim said, one of the few big companies out there, as mature as they are, that actually margins are increasing in this environment. So that's good for them. Look, I get all on the margins, I think you stay long Netflix here.
So this is Netflix on the monthly chart. And you can see you have buyers willing to get into Netflix just sub $800. You have a daily buy level, a weekly buy level, and a monthly buy level. However, price is currently at $973. So let's zoom into the weekly chart. And you can see that rally in price, 2 basic candles, the rally out, making the weekly buy level at $760. Now you do have some consolidation. And that range is roughly $300. And so when you get back to the top of the range, well, price is going to be in oversold or in retail price. Let's drill down to the daily chart. And price is still in a downtrend, represented by lower highs and lower lows. However, price can take out this pivot high to the left. That would invalidate the downtrend. Now, why did price get rejected at roughly 1,000? Well, that's a round psychological number. But also, this drop in price, base and candles, and the drop created a weekly sell level. So if price takes out, or rather this is daily sell level, so if price takes out this level with some consecutive closing candles, not only does it invalidate this daily sell level, but also invalidates the downtrend, and potentially what we can see, which I anticipate in the second half of the year, is price eventually breaking all-time highs at the 1,600 level. Thanks for watching. Subscribe, please. Like the video.